Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon and Haddad. How are you?
Good, man. Just getting ready. This will be played, I think, after tag. So
Mhm.
I'm heading to tag right after this. So um, just staying dialed in, man. The community is excited. Seeing the fuse love we're getting already bright and early. So it feels good, Tommy.
Yeah, no, it feels good. I know my marketing team has been working real hard on all the few stuff, so really proud to see it actually because we've had it behind covers for so long. Now to get it out there is just super exciting. But we have a lot going on today. We have the Broker Buzz, where we're going to dive into the top posts of the week for the Brokers Our Best Facebook group, discuss what's trending, what's working, and what you need to know, go into a sales pitch and story time, as we always do. But first, a fortune cookie, a broken one. It's so hard not to cheat and look at these. It's like,
Yeah, I know.
But, all right. Our fortune today. September is a month of unexpected surprises and opportunities.
One more time.
September is a month of unexpected surprises and opportunities.
Well,
Fuses in September.
yeah. So September, my kids' birthdays are in September. Fuse is in September.
My
It's
birthday.
like the end of conference season. October actually is the end of conference season. But I'm curious to see. There's a lot going on in my life too. So that's one that I'm trying to kind of, all right, how's that going to unfold? What am I working on now? What will that look like in September? My kids turn 3. Is it something to do with my twins? So that my brain's all over the place for that. What about you?
Mine is I was thinking about staying down in Austin after Fuse, celebrate my birthday in Austin. I have some friends that moved down there after college, and it'd be fun to reconnect with them. And Jillian might fly down, so I think the surprises is seeing old friends, and hopefully the surprise is that they're all doing good and not lying to me through text. Opportunities is I've never been to Austin and I've always wanted to, so that's an opportunity.
Hey, you go down there, like, it's just miserable.
Well, he's working on a government contract, so he can't be doing that bad.
No, I know. It's just like wow, you said you were doing amazing. It's just I know.
Yeah, I haven't seen him since 2014 maybe, so it's been over a decade. So it'll be a good time catching up. But let's dive into the broker buzz with our first question of the week. John, what's the latest on AI usage and compliance and client data?
Okay.
Any clear guidance?
Yes. So we had a webinar scheduled for this week. We canceled it. And I have a one pager for all of you that has been finalized. Tommy, I'm going to give it to you here for you to give to the community. So this is just, y'all, this is just what you have to do next. This is what's coming up. Oh, there we go. Whoops, sorry about that. All right, so this is what's coming up. So basically, look, in about 70-ish days or so, there's going to be some new guidance on AI from Fannie Mae. So there's going to be 8 things that you're going to need to do. And this is the most recent bulletin, LL 2026 April. So LL dash 2026 dash 04. That's how you'll find it. And basically, if you use AI at all in your mortgage process, you need governance, documentation, accountability, and oversight. So 8 specific things that you must do. You will get the PDF. Tommy, we'll post the PDF and let's blast it to the emails too for the people we had registered. Number 1, you need to create an AI policy. So what is your policy? Document every AI tool that you're using across your business, including marketing, CRM, automation, lead management, customer communication, underwriting support, servicing, and internal operations. Number 2, you must assign an owner. So what that means is if you get audited, they need a go-to person that is set to handle all of this. That doesn't mean multiple people can't know what's going on, but you need one set person that's assigned as an owner. Number 3, build an AI inventory. Make a list of all the AI platforms, what they do, who uses them, and what customer or company data they can access. Number 4, train your team. Just do this quarterly. Build out a form, an AI training form. It's really simple to build. Send it out. What is allowed? What is prohibited? And when human review is required. This is a CYA type of situation. Number 5, review fair lending and compliance risk. Ensure your AI tools do not create unintended discrimination, steering, or compliance concerns. What do I mean by that? Well, look, think about it. If you're training your system to look for the best ROI and it thinks a certain lead type is the best ROI, well, then if you're not training the AI correctly, it's going to just say, hey, just go after these consumers, and this looks good. You need to train it to never do that because that is an issue in our space that we must always stay in front of. Number 6, vet your vendors. You don't get to blame your vendors. So if you get audited and Fannie says, hey, this vendor is doing X, Y, or Z, yeah, well, that's not my company. That is not, you cannot say that. You do not get to blame and point your fingers at a vendor. Number 7, strengthen security. Know what data is being entered into AI systems and establish rules around customer information and data protection. And last but not least, be ready for questions. Fannie Mae says at any point in time, they can audit you and ask you a barrage of questions that they deem fit. So those are the 8 things that you can work on and implement into your business immediately. Tommy, I'll send the PDF to you now so you have it, and that will be good. But there's a lot of changes coming with AI. And Fannie, one of my favorite things, Tommy, is Fannie saying, don't blame someone else, which some people like to do. Well, it's not me. I'm not doing anything with it. So
you also can't blame AI if you don't train it properly. Like you can't blame the results. You at the end of the day, you're the decision maker. It's a tool. You can't carpenter can't blame its saw or its hammer. You know what I mean?
100%.
But cool. Yeah, and we'll get that up in the AIME member portal. So if you're an AIME member, you can go and download it in the resources section there. And our next question. Anyone have any avenue for 600 FICO looking to get some cash out of an investment property, but doesn't make a ton of money because he needs to repair 2 units to get it fully up and cash flowing better?
Okay, so for this question, number 1, why is the consumer in the position that they're in? I always want to understand that. And so just ask questions. Hey, what happened? Could be something big, right? Like life took over, whatever the case might be. It's really important you understand the dynamic. Number 2, from this perspective here, you need to make sure that you're like, why does the client want to do this? Is it because they think this will change the game completely? And then the last piece of it is you got to be direct, right? A low 600 FICO, it's not everyone's jumping to do something here. So what I would look for is, does he have a primary residence that you can do something on? Instead, get the money out at a better rate, go do the upgrades that they need. Because remember, now with investment properties based on the client's income, it's not always tax deductible anymore like it used to be, just with all the changes and how it's navigated. Your primary residence can be, depending on what you do, whether it's a cash out refinance or HELOC, there's 2 different stipulations on a home equity line of credit on whether you can write them off or not. But you also are going to get a better rate because it's less risky with it being your primary residence. So I'd have this consumer look to see if they can do something with their primary instead. The pricing, even if you find somebody for the investment property, I mean, you're going to get absolutely punished on the pricing here. If you don't have a choice, it is what it is. You're going to want to look at non-QM and see if there's opportunities there. We have a few of our partners as well. They go pretty low on the FICO side of it, but I would look to do the primary if I could on this one.
Absolutely. And our final question. Has anyone dealt with foster care income? It is not taxable, and I'm wondering how I'm supposed to prove it.
So Tommy, I sent this to you as well. This is the guideline right from Fannie. Here's what you need. The lender, this is from Fannie Mae. Look up FHA, VA just to be safe, depending on the product. Freddie will follow suit on Fannie, but there might be a couple of nuances. So please look at Freddie's guide as well. The lender must obtain evidence of payment by using letter of verification from the state or county sponsored organization providing the income, and they must provide receipt of incomes documented for the most recent 12 or 24 months based on the income history requirements below, using sources including but not limited to bank statements, cancel checks, or other electronic receipts of payments. So what do you need? A letter from the state or the county that, yes, this person does do foster care, because you have to report that information to every state. So don't let a consumer say, I don't have that. You can't foster anybody unless you report it to the state. So let's start there. Number 2, they're saying you can get 3 different forms to prove the income. bank statements, canceled checks, or other electronic receipts of payments. Look, Fannie gives a lot of opening on this, in my opinion. They give us a lot of gray. Now, you're going to want to look at the income, make sure it's not multiple in the same month. If you're going to run into issues there, the underwriters will push back. You want it really simple. So for income history, a 2-year history of providing foster care services is expected. However, if the borrower has not received this type of income for 2 full years, the income may still be counted as stable income if the borrower has at least 12-month history of providing foster care services and the income does not represent more than 30% of the total gross income that is used to qualify for the mortgage loan. So what does that mean? That means that, hey, if this person maybe worked for a foster care company prior to starting their own foster care or taking in kids, that would count as potentially meeting the at least 12 months of history. The second piece of it is if the client makes $10,000 a month, they're saying in order to use this, the foster care can't make up more than 30% of their gross total income. So in this case, they can't be making $3,100 if they don't have the full 2 years. If they have the full 2 years, then you're good to go by just receiving the documentation. Income continuance, lenders are not required to verify continuance unless they have a reason to believe the income may not continue. So, Tommy, I sent you the guideline. This is very extensive. It's very laid out. I just read it to you guys live here, but it is doable. Don't let consumers say, I can't get it. They must be able to get it. Remember, you're helping them get a house or refinance. It's generally the biggest, largest financial asset for a majority of consumers. If that's the case, they got to do a little legwork, and there's nothing wrong with that.
Absolutely. Hope that answers your questions. I certainly learned a lot. I got the things. We will put it in. They will be there and ready for everybody. And if you want your question answered, you can be in the AIME's Brokers Are Best Facebook group. If you are a member, ask your questions there. I go and take a look every single week. Use the hashtag BrokerPowerUp to be sure your question gets answered. And if you are not an AIME member, scan the QR code and we'll be right back on the other side of this ad with story time and some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
And I'm waiting to become a better salesperson. John, what do you got?
All right. So today's tip, I just did an article on this that'll be released, we'll see, about a week or two. But, not every relationship is worth saving. And early in my career, I would do whatever I could to make my connections with real estate agents, especially when I came into the broker side. And you sit there to figure it out. You're looking for the attention. You're not getting attention, right? Because you're new. You're trying to work with anybody. You take the bad files first. Like I've done all that. And some of you might be in that state, which is totally fine. Nothing wrong with that, with trying to see what works and what doesn't. I did so much of that. Well, you see, so many loan officers, we talk about like winning the relationship and how I got the agent to work with me. But there are so many times to where we don't really always want that agent to work with us. What about the times when you have to fire a real estate agent as a loan officer? Like, what goes through your mind? How do you fire someone? You know, there are great agents out there. Let me be clear. I work with some incredible agents. There's so many beautiful, wonderful agents in this world. They know how to add value. They're on top of their business. They respond with urgency. They treat you with respect. If things go south, they're there to handle it with you. Just good human beings that never blame the lender and are always trying to help figure it out. Listen, I know sometimes it's our fault, but at the end of the day, we're still people. And we have to be able to communicate. Now, what I talk to loan officers and what I posted in this article is a really bad relationship can cost you 3 opportunities. Okay. Number one, it's costing you the deal that you're working on. Number two, the referrals that they're never going to send you. And number three, the opportunity you lost because of all the energy you spent on focusing on the wrong person. Too many loan officers were out there thinking we're being patient, we're being loyal, and we're playing the long game. And y'all, I thought that way for the longest time. We'll figure it out. I can teach them to communicate more effectively. I can teach them better. If
I
they're
can
not in
fix
the
them.
same mindset as you when it comes to growth, there's nothing you're going to do that's going to teach them. So, what agents am I talking about? Like, some are worth it. And this conversation that I'm going to teach you, this 4-step process that we're going to walk through today, this has everything to do with you basically saying, hey, I've tried to do this 5, 6, 7, 8 times. I've absolutely tried to make this work. I've tried to stay on top of it, but this just isn't working. These are the agents that only call you with fires. These are the agents that call you on Sundays and say it's super urgent. These are the agents that never send you a referral. These are the agents that immediately blame you anytime something goes wrong. They tell your client it's your fault, the title company it's your fault. They want zero accountability and for you to do all the work. No, thank you, my friend. At some point, y'all, this is not a partnership. This is a straight up distraction. And distractions in this market right now are going to cost you a tremendous amount of money. So there's 4 steps that you can take to ensure that you professionally get rid of an agent. And I'm going to walk you through those 4 steps. I've had to do this myself on, unfortunately, too many occasions. And these are for the ones for my LOs out there. I want you to think about the agent that you know you have to have this conversation with right now. It's not for everybody. This isn't me telling you guys, go on a rampage. Agents are beautiful. They help us. They're just incredible for our consumers. They're great to negotiate, to help negotiate. They help put food on our tables. I've thanked my agents thousands of times. They've helped me. But there are some that aren't really good, just like there are some loan officers that aren't really good. So how do you break up with them? I know it sounds funny, but that's just the reality of what we do.
Sure,
So
it's
the
very
first piece
similar.
is decide before the call how it's going to go. So this is not a negotiation. You are calling to inform them that this partnership is going to be terminated. Now, when you call them, ask yourself, am I calling to communicate a decision or am I calling to try and fix this? Those are 2 very different conversations that you're going to be having. And if you're going to call and say, oh, I'm calling to fix this, these next 3 steps don't matter to you. Like now you got to go back and figure something else out. This is for those of you that say, I'm communicating a decision. I am done working with this person. So as long as you know that going into the call, those are the only 2 questions you ask yourself, and you know that I'm communicating a decision, now you go to step 2. Step 2, be direct and professional. You know, I learned this. Somebody taught me how to put somebody on a performance letter years ago, how to fire somebody years ago. And I got so many different tips. And this is the tip that hit me the hardest and made the most sense. So many leaders would do things differently. Maybe they'd have the letter turned over, they'd have pleasantries. What he told me to do is right away say, hey, I just want you to know that we're about to have an uncomfortable conversation. Can you please take a seat? So I take that similar approach whenever I go into any conversation with an agent, a business partner, doesn't matter who it is. Hey, Mr. Mrs. Client. Hey, Sally. I just want you to know that we're about to have an uncomfortable conversation. I need about 7 minutes of your time. Right
Sets
away.
the tone.
Go ahead.
Sets the tone.
Right away. Right away. I don't have time. Like right away.
Yeah.
Okay. So tone is set right away. Look, I wanted to call you personally, Tommy, because you've earned the right for me to have this call over the phone and not just do it over text because things can get lost in communication. And I'm
I
just going to
appreciate
go ahead and rip this Band-Aid off here, Tommy. I've given this a lot of thought, and I don't think we're the right fit to continue working together moving forward. Now, what you cannot say here, okay, is maybe we should take a break. All right? I think we should slow things down, or I don't think this is working. Your words matter here. You're not going to leave the door open for a conflict. Very direct, very specific, very respectful. Nothing I said was disrespectful in there. And then step 3, after you've done that, give a clear reason. This is not a courtroom presentation. This is you staying dialed in and just walking it through. If the agent simply doesn't get it, you're going to say something along the lines of, I've tried several times to align on communication, expectations, and how we serve clients. I don't feel like we're getting the consistency we need. And I think it's best we go in separate directions. Now, what if you have an agent that's like verbally abusive? We've all had those agents before. We're just abusive. Ready? Say this. This is a beautiful thing to say. I'm a big believer in accountability, but I'm also big on respect. Some of our recent interactions crossed a line for me, and this is not how I choose to conduct business.
that gives you the power foot forward.
Right away, and here's why it's so important. And I'm not going to tell you guys that I never go into a conversation feeling this way. But a lot of people go into these conversations trying to win an argument. You're not trying to win anything at all. You're not. You're simply trying to communicate a decision that you made. So the goal is to end the relationship with clarity, not win. There's nothing to win here. It's not a fun conversation. And if you go in trying to win, you're done, because then you can get triggered. And that leads me into step 4. Keep it simple. Don't take the bait. Look, people try to rage bait me all the time. All right. It's just part of the role that I have now. And I'm not going to sit there and tell you there aren't times where I sit behind my computer and I'm like, oh, great. I don't get riled. Of course I get riled up. I'm a human being. But I don't get riled up as much as I used to get riled up. It's very minimal how often I get riled up. Just gotten good at it because it's the nature of the game. It's what people do. It's how they get attention. They want your attention. So do your best to not take the rage bait. Agents will try to turn this into a debate sometimes. They'll say things like, what did I do specifically? Well, what do you mean? Well, you're being too sensitive. All those things, right? My blood's boiling already saying it out loud because I know the conversation.
Oh, I was prepared to role play it.
Oh, listen, no, I'm pressed for time. We could definitely.
Oh, I know.
This is probably one we could role play a lot because I don't think a lot of people talk about this.
No, this is a good topic.
It is, and look, y'all, this is the 4 steps. It's in my article will be released from NMP here in I think a week or 2, and so we'll share that article with you guys when it's done, and you can walk through. It's exactly the 4 steps I just mentioned. But and look, this isn't about like an ego, and you'll see that in my final thoughts. This is about you pivoting, taking control of a conversation, and building the business you want to build now. What you do today will dictate how your business is 5 years from today. So what you accept today, what you allow to go on today, is how your business is going to be operated not even 5 years, a year from today. So ask yourself, are the actions I'm taking today going to set my business up for what I want? And I put this in there. I'm going to read this question to you. Here's a really good question to ask. So before you keep trying to save it, ask yourself one simple question. Am I fighting for this relationship because it is valuable, or because I do not want to admit I let it go on too long? Those are my tips for the day, my friends. Continue to sell, continue to keep your head down, and just remember, continue to push forward and find a way to propel forward. And if you're not an A member, we would love for you to join. $199 for the year. We have Fuse around the corner. I probably got to do a Fuse.
Oh yeah, we're gonna be doing a Fuse. Yep, we got a trailer going.
Yeah, we are. We're booking fast. We'd love to see you there. And until next time, take care.
Absolutely. Thank you, dear listener, for tuning into this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.